Hey guys, coming at you with another daily update video. It is Thursday, June 18th. The market just closed about 2 minutes ago. It's 4:01 p.m. and it was another just sideways and I have to say rather boring day in the market. But it was a great day. Again, if you had some cash secured puts that you had sold, or you had some covered calls that you sold and you didn't want your stocks to get called away, because pretty much the whole market was sideways. I mean, if we take a look at the board here, mixture of red and green, but again, just like yesterday, not a lot of movement. Everything is up like plus or minus a percent, mostly less than a percent. So just taking a look at the stocks that I'm interested in. See, AMD was down 0.8%, but it was up and down all day, pretty much sideways overall. Micron down 1.2, again, just kind of up and down all day long. So let's take a look at AMD. I don't have any current positions in AMD, but just to see how we're looking and how the stock was trading today. You know, in my previous videos from earlier this week, I talked about possibly getting into some opening new positions on AMD in terms of selling some cash secured puts, but I just couldn't get a good setup because the longer you wait towards the end of the week, like Wednesday, Thursday, you just don't get good premium. And if you want a good return on your risk, you have to go with a higher strike price. So, I mean, if we take a look at AMD right now, it actually opened up pretty much dead even with where it closed yesterday. And then, you know, the first couple minutes, the market's very volatile, so it bounces up and down. And then all day long, it just slowly bled lower. So, but not by much. I mean, we opened at 54.56, ended up closing the day around 54, so it dropped about 50 cents, down about 1% or so. So, you know, it's a great day. If I had a put on AMD, I would have just let time eat away at my premiums, and that way I would have collected max premium, hopefully, tomorrow. But if we just take a look at some of the options that were available in terms of selling puts, we can see that I really would have had to get in at like the $52 strike to get a 0.4% return on my risk, which only leaves me with a $2 buffer. And, you know, if we have like another decently red day tomorrow, it's possible that that strike could have gotten tested, or that AMD could have blown down below the strike and I got shares assigned. And this week, I had a plan of trying to be as much cash as possible by the end of the week. So I was trying not to get any new shares assigned. I actually trying to be 100% cash going into the weekend. So I actually didn't end up making any plays, or at least any new plays this week. So just taking a look at the chart on AMD here, again, just like another sideways day. But if you look back, I mean, when AMD trades sideways for a couple of days, it's usually just kind of like building up and then has a good like shoot up, or sometimes even a break down. But most of the times when it's trading sideways, it gaps up. So I'm hoping that AMD just kind of, you know, getting itself built up and pent up, and then at some point it's going to bounce up again into the, you know, mid to high 50s. But if that's the case, I still don't like where it's trading at in the mid 50s right now. I like to get in AMD in the low 50s, ideally high 40s, because then I know it has room to move to the upside. So for two reasons. One, I have a pretty good chance that my cash secured puts will expire worthless, but also if I do get a sign on them, then I know AMD has room to move up so that I can sell them off for stock appreciation plus or minus some premium if I sell covered calls. So I just don't like where AMD is trading at right now. You know, maybe next week, if AMD trades in the low 50s, I should be able to open up some positions on Monday in terms of cash secured puts at like the 48, 49 or less. So we'll have to see how AMD closes tomorrow. I mean, looking at the RSI curve, it is rather close to the oversold category. So I feel like just kind of building up for a jump up, but we'll have to see till tomorrow to see what happens. So the one position I do have right now, actually I have two positions, but the one stock I own right now is on Micron. And from my prior videos, I had sold a cash secured put on Micron last week at the $49.50 strike price, and I was assigned on that over the weekend. So I currently hold 100 shares of Micron at a cost basis of $49.50. And so I was looking to see, you know, what my strategy was to do with that this week. I am 99.9% certain that I'm in one way or the other going to cash out those shares tomorrow at some point. So right now, I mean, Micron closed the day around $50.48. So I am profitable right now if we just take a look and do some quick math. So $50.48 minus my cost basis of $49.50. So I'm up about $100, or, you know, $98 to be exact. I actually down a little bit because yesterday I did the same calculation and I was up about $156 in unrealized gains. But as you can see, Micron opened up in the red, kind of came back up to where it closed yesterday around 11 a.m. and then it just bled off all day long. And we did have a little bit of a rally at 3 p.m. during power hour, but it wasn't able to kind of get back up to where it closed yesterday. So Micron was down overall about 1%, which is why I have less money right now in terms of unrealized gains. But I'm hoping tomorrow, and being end of the week, it's going to be a really strong green day. At least that's what I'm hoping for. And then that way, this stock, if it goes up to like 51, 52, I'll probably just sell off the shares outright and just collect, a couple $100 or $200 in stock appreciation and just call it a day. But I'm feeling good about it right now because looking at the chart from Micron, it kind of tested the low 50s all day long. Actually, if we go back to Robinhood, the lowest it got was like $50. So it seems like the $50 stock price is a area of resistance for Micron. It doesn't really like going below that. And that actually fits because the $50 price is actually right on this 78.6% Fibonacci level. So, it's going to take a lot of effort if Micron wants to blow below 50. So my 49.50 strike should be, knock on wood, should be secure. So at this point, I'm just trying to figure out how much profit I want to take, meaning do I just want to take a little bit of profit and call it a day, or do I want to hold off and see if I can collect a little bit more stock appreciation if tomorrow Micron gets to like 51 or higher. So I'm going to play it by ear. I'm going to watch the market tomorrow. I think if it gets to like 51.50, I'll definitely sell it off and just to secure about $200 in stock appreciation, and that's a good return. I mean, because I have $4,950 essentially invested in these 100 shares. So if I can get $200, let's say even $150, let's say it gets to $51, right? $150 divided by 49.50. I didn't do that right. So $150 divided by 49.50, that would be a 3% return on my money in a week, which is very good, especially because it's just one stock or one play that I have. So, I mean, even right now, if I take my profits at $98, that's still going to be a good return on my risk. That, $98 divided by my collateral 49.50 in my 100 shares, that's going to be a 1.9, basically a 2% return on my money. So that's, even if I were to sell out right now, that would be, I would be happy with that amount. So yeah, I mean, it looks like Micron's been also kind of trading sideways for the most part these past couple of days. So maybe Micron is also due for a big breakout. So that's why I was just kind of holding on to the shares to see what was going to happen. But like I said, I'm going to try, and I'm 99.9% certain that I want to be cash going into the weekend. And then that way, come next week, next Monday, I can kind of start fresh with my portfolio and open up new positions, maybe in some new stocks. Maybe I'll take a look at Disney next week, see if I can get in there at a good price. But, speaking of Disney, let's just take a look at the graph here. So again, Disney's been trading sideways as well. It's kind of been hugging the 61.8% Fibonacci level and just kind of trading along that level. So, I mean, if we take a look at the Disney daily chart on Robinhood, see, it's been flirting around where it traded yesterday, around this dotted line. So it's kind of been up and down. And then during power hour, we kind of had this a little bit of a pump, and we actually came up to about 118. So I want Disney to get like, above 120. But obviously I want to lock in a put and get assigned shares below that. But it was in the green today. So we'll have to see what happens with Disney come Monday if I have some free cash available. But I think there was some good news that came out on Disney today, because I think they inked some sort of deal with Hulu. So maybe that's accounting for this little run up during the end of the day. But if that's the case, then maybe Disney's going to be green tomorrow, which might make it harder to get in at a good price on Monday. But like I said, we'll see what happens. Disney also, I feel, is a little bit overvalued right now, because it looks like over the past couple weeks and months, Disney was liking to trade between these two Fibonacci levels, between roughly like $100 and $110. And so right now it's been trading between the 110 to 120 range. So it's, we'll see if Disney wants to stay above here, or if at some point it is going to come back down and trade between 100 and 110. So we'll have to see, because if that does happen and it trades between 100 and 110, then I could probably sell puts in the high 90s, which if I can get assigned Disney in the high 90s long term, even, that would be fantastic. So we'll keep an eye on Disney to see what it wants to do. And then I actually opened up a position yesterday on IWM, which I'm not sure if it came across in the video. It seemed that my video from yesterday was very glitchy. I think there was some issue with the rendering or maybe YouTube's upload, but at that point, by the time I realized it, I just said I'll just recap on today's video. There was no point in me remaking the video since I make daily videos. So I actually opened up a cash secured put on IWM yesterday at a strike price of $135.50, and I actually collected $56 in premium on that option. So I was very happy with that, because actually looking at the stock chart for yesterday on IWM, I was watching it all day long, and there was a point around 3:30 p.m. where actually during power hour all the stocks kind of dipped. So I caught IWM at a dip around 3:30 p.m. So I was actually able to lock in a good premium at a relatively far out of the money strike price. So if you just look, and it expires this Friday, of course, because I like to sell weeklies, but I believe IWM was trading around this range as well yesterday, around $141 or so. And my 135.5 is all the way down here. And as you can see, I sold it for $56 and it's already worth only $17. So right now, if we just do 56 minus 17, I'm already $39 in profit. Unrealized gains, of course, because I still have the position open, but I'm already up $39 on this position. One, because a full trading day has passed, and also because IWM was green today, so it moved further away from my 135.5 strike. So I'm pretty happy with that. I'm pretty confident that that will get expired worthless by tomorrow, because IWM would have to drop about $6 in one day, which, I mean, that would have to be like a circuit breaker, like big red day for the whole market, which hopefully won't happen tomorrow. I actually want a big green day. That way this put will expire worthless, and then my Micron shares will have a lot of stock appreciation. So that's my week so far. I have basically a cash secured put open on IWM at 135.5, and I have 100 shares of Micron. And if you remember from my previous videos earlier in the week, I had AMD shares which I sold for a profit. But actually, in retrospect, if I had held those shares, because I think I sold them when AMD was around like 51 or 52 if I remember correctly. I have to go back to my videos and see. But right now, AMD's been trading at 54-ish, so I probably left about $200 on the table by not holding it. But earlier in the week, the market was very sketchy. I was concerned that we were going to have a big sell-off this week, so I wanted to get out as quickly as possible. So, it's fine. Profit is profit. I think I made about $156, if I'm not mistaken, on that AMD share sale. So that's a very good return on my money, so I'm happy with that profit. But yeah, that's been my week so far. I am looking to, like I said, be all cash going into the weekend, and that way I can look into making up some new options and opening some new positions for the following week. But I also came across some interesting kind of tweets. So I came across some interesting graphs on Twitter today, and this graph shows that I believe 50% of the new coronavirus cases in the United States are all from 5 states. So looks like California has just really been taking off in terms of confirmed cases. So California, Texas, the white line is Florida, yellow line is Arizona, and pink is North Carolina. So right now, these 5 states are kind of unfortunately booming in cases of coronavirus. So if you live in one of those states, please be careful, wear a mask, stay safe. But graphs like these make me concerned about, the real question is, are we still in the first wave, meaning the first wave is not over yet, or are we going to say the first wave is over and now there's a potential second wave coming on? Either way, I am worried, and that's why I'm trying to be a little more cautious with my plays, because I don't know if this is going to cause the market to tank again like it did back in February, March, April. So I'll have to wait and see, but that's why I'm playing like extra safe and not taking riskier plays like I was a few weeks ago. Because yes, I still want to make a little bit of profit, but I kind of want to make the bare minimum profit. So I'm probably going to open up positions next week at pretty much 0.4% return on my risk. I don't want to end up bag holding shares if the market tanks. But here's another graph I saw, and this is in terms of the tax revenue in these states and how much it's decreased because people aren't working and things like that. The economy in these specific states haven't been doing so well. because of the lockdowns and such. So New York's getting hit the hardest. New York's tax revenue has fallen 40%. Maine, Hawaii, Massachusetts, California, I mean, these states are getting hit hard. So again, like, who knows in terms of the overall economy of these states, but also of the United States, how this is going to affect the market. So that's why all the graphs I see are never good news. Like, the data doesn't lie. So that's why I'm very concerned that at some point the stock market is going to catch up with the economy. And I don't think personally, and this is just my opinion, that we are free and clear and that we're not going to dip again and that the stock market only is going to go up from now on. But that's just my opinion. Like I said, I'm not some financial expert or anything like that. And then here's another graph. So this graph is showing also the number of unemployed people throughout the country. So as you can see, like, week after week after week, the unemployment number is still high. So, people are saying that the lockdown is ending and people are going back to work. And that might be true, but there's still a lot of people that are out of work. So again, I see graphs like this and there's just more bad news for the economy, that I feel like at some point there's going to be some sort of like abrupt, downturn in the stock market. And I want to be ready for that, or at least I want to be as prepared as I can be, and not holding, hundreds of shares of stock or having $25,000 locked up in the market and then watching it just all dip. I mean, if that does happen, you can kind of mitigate that risk, or not mitigate the risk, but at least use it to your advantage by selling covered calls. So you can actually make money on the way down by selling covered calls and then not letting your shares get called away by selling them far enough out of the money. But, I don't want to be in that situation to begin with. I'd rather sell cash secured puts on the way down and try not to get assigned. But if I do get assigned, well, at least I got in at a sale price, as opposed to buying in at the top of the dip and then selling covered calls on the way down. I'd rather buy in, while we're dipping. But, hopefully it won't come to that, and we'll see what happens. That's just my opinion right now on the market. And then another website, I'm not sure if you're familiar with this, but this is a pretty popular website. This is the US Debt Clock, so it's just usdebtclock.org. And it just keeps a continuous tally of, for example, the United States national debt, and actually gives you a description there in the middle. It says, the national public debt outstanding represents the face amount of principal amount of marketable and non-marketable securities currently outstanding. So right now, the U.S. debt is what? Is $26 trillion, and as you can see, it just keeps going up every second. But it also has other interesting things like the U.S. GDP, tax revenue and such, revenue per citizen. It's just very interesting. And then actually, you can actually go into and look at your specific state or even the world debt clock. So let's say you live in California. You can go to the California debt clock and you can see, the population of California is about 39 million. They are roughly in $552 billion of debt. The debt to GDP ratio is a little over 19%. There's 4 million people on food stamps. It's just very interesting. If you're bored, you can kind of just see, how bad is the U.S. economy right now, or how much in debt are we? But just a fun little website if you just want to peek at it and just see how your state is doing, or I think you even look at other countries as well by looking at the world clock. Yep. So there's USA, China, Japan. So I mean, unfortunately, it looks like the U.S. is number one in terms of national debt. So, I mean, let's see what other countries are doing. Canada's not that bad. Canada's only at 1 trillion. China's pretty up there. Japan is even worse. Germany's not looking that bad. UK not that bad. I mean, we are multiples above even the next. The next closest is probably China, and we're over double their national debt. But anyway, that's just how my day was. Let me know how your week of trading was. If you opened any positions or closed any positions. If you just want to take a look at the most popular options that were traded today, just refresh the screen here, and we can see that, again, a lot of calls on the board. So it seems like people are still bullish on the market. People are selling and buying calls. So let's just see. The most popular was CLDR. I'm not sure what that stock is. Cloudera. I think this has become a hype stock because I think there's some sort of technology company. I've read about them, but again, I don't know what they do, so I don't want to invest in that company. But Apple was pretty popular today. Roku, I heard about today too. Roku was a lot, but be careful with Roku. There's a joke I heard with Roku, and they say that Roku will make you broku, so be careful with that. I mean, that being said, I trade AMD a lot, and the joke with AMD is they call AMD the advanced money destroyer, which, you know, so far for me, it hasn't destroyed my money. So hopefully that's just a joke and it won't come true. But I'm a big fan of AMD right now. And speaking of AMD, here's AMD, these 55 calls. Let's see, yesterday and the days before, the $60 calls on AMD were pretty popular. I guess they've fallen in popularity for today. But it's interesting because these expire tomorrow. So people were buying one data expiration or selling one data expiration 55 calls on AMD. So AMD closed the day, I believe, at 54 if I remember correctly. So that means that people are pretty $54. So that means that people are pretty bullish on AMD, I believe, in that it's going to be green tomorrow, which, you know, it's great for AMD, but personally I want it to be red so that I can open up a position on Monday to get in at a lower strike price. But taking a look, you know, a lot of tech on the board. Facebook, Microsoft, more Facebook here, Tesla. Here's another AMD. Here's our 56 call. I don't see Micron on the board again. It's not that popular today for some reason. Actually, I don't see it at all on the board. So that's interesting. Let's take a look at the most popular ETFs for today as well. And it looks like I'm gonna get SPY. Yep, SPY. Wow, SPY's 1, 2, 3, 4, 5, 6, 7, 8, 9. SPY is the top 10. Actually, it's every spot in the top 10 of most popular options in terms of ETFs that were traded. IWM. So that's interesting. So an IWM 140 put was the most popular option today, expiring tomorrow. So that's interesting because IWM is at 141. So I guess people are thinking that IWM is going to be red tomorrow, but we'll have to see how that plays out. Here's another IWM. This is IWM call at 145. So there's another subset of people that are, you know, bullish on IWM. There's the Qs at 240. You know, one other ETF I looked at, and I haven't really talked about it too much, but that was XLK. And what XLK, I haven't looked into it too much, but it's another tech sector ETF, so it seems similar to the S&P 500, but it's much cheaper because it's only trading at around $100 a share, whereas the S&P is trading at, sorry, the SPY, the S&P 500 ETF is trading at $300, so almost triple the price. So I was taking a look at this and just kind of see, you know, because the chart on XLK also looks good, where it's kind of over the past 5 years just been going up. So, you know, I think it almost seems like it's a baby SPY, meaning if you can't afford to get some cash secured puts on SPY, this XLK might be a good play. And it's actually cheaper than QQQ as well, because QQQ is in the 200s, yeah, 240s. So I have this on my watch list that I just added XLK. I have to do a little bit more research to see, you know, if this is similar to the SPY or if there's different stocks between the SPY and the XLK, because it just tracks the index of S&P 500 tech stocks. But I have to research and do a little bit of digging as to why someone would play SPY instead of XLK. I mean, I know the one reason is that XLK is not going to be as liquid as SPY, meaning the volumes are just not going to be as high because, you know, I know that SPY is the most liquid option. So, I mean, let's just see if we want to, for example, let's say I wanted to sell put on XLK for tomorrow, just hypothetically, and let's just pick this $101 strike price. I mean, yeah, the volume is 121, the open interest is 886, so it should be able to get filled. I mean, the bid-ask spread is not that wide. It's only a spread of 3 cents between 12 and 15, so it should be liquid enough. I mean, let's see if I go far out of the money. Let's say I do like the 100. Open interest is even more at 1,346. The bid-ask spread is tight again at 2 cents, so, you know, maybe I'll take a look into XLK over the weekend and see if maybe that's something I want to play next week. But another stock which I know of, but I don't want to make a play on, is XLF. And that's a similar stock, but it's for the financial sector. And I'm just not really into the financial stocks right now because, like I said, the graphs and the charts I just showed you, everything is always bad news in terms of banks and finances and the financial sector. So I really don't want to get into that right now. And I mean, if you look at the financial sector, it hasn't really recovered, in my opinion, like the other sectors have so far after the big crash. So that's why I'm still kind of hesitant on the sector. And I think if we do have a second wave and the market dips again, then maybe it might be a good time to get in the financial stocks for a long-term play, because, you know, you would think they're going to come back up with time. And since they haven't recovered fully or near fully already, they're probably going to dip even lower, and you might be able to get in at a good stock price. So anyway, there's a whole I think there's a whole bunch of these XL stocks that track different sectors, but I have to do a little bit more research. Let me know if you've played XLF or XLK or any of these stocks, and let me know how they've turned out for you. But as always, if you have any questions or comments, leave them below. And as always, happy trading.